Good afternoon, everybody. I'm Anna Salter. I'm just going to give everybody a few moments to join us. I can see the numbers are going up nicely in our attendees box. We've had a couple of technical issues, which mean you can't actually see Scott at the moment, but rest assured he is here with me. So all good. So just a little bit of housekeeping on my side. We are doing this series of webinars in order to celebrate AMEC Measurement Month, and so there's lots of good events happening in the run-up to the AMEC Awards and beyond. So November is now traditionally our time to celebrate all things measurement and reputation. So thank you very much for joining us in this event today. We have we Onclusive have another session next week on Tuesday the 15th at noon, and so I'm just trailing that now, and that's with Kyle Mason of Shell, and we're going to be talking about how they have reorganized all of their measurement capabilities and how that came into great effect in a particular crisis situation they've been through recently. So please join us for that, and you will get a follow-up email about that when it closes at the time, but it's next Tuesday at noon. Now we are going to show you a deck, a few examples, a few slides to help us talk through what we're talking about, and we will be taking questions. I'm sure you'll be directing most of your questions at Scott, but I'm also very happy to take any as well. So there is a questions box on this event portal. So please put things in there, and we will be very happy to handle those towards the end of the event. And so I think most people have joined us by now who are going to. So I will start by introducing myself. I'm Anna Salter. I'm head of consultancy here at Onclusive. Now, Onclusive is a new-ish brand name. We carved out from Kantar on the 1st of January of this year. So essentially, we are the pre-existing Kantar reputation business, in addition to Onclusive, which is a US content and analytics platform, and PR Glue, which joined us at the same time. PR Glue was recently rebranded as PR Manager. More recently, we've acquired Critical Mention and Digimind. So Critical Mention is a major broadcast monitoring platform in the States, and Digimind is a social media platform. So it's exciting times here at Onclusive Towers. So I'm also delighted to welcome Scott James of Lloyds Banking Group. So Scott, would you like to introduce yourself?
Yeah, thanks, Anna, and good afternoon, everyone. Just to save Anna's blushes, I'd just like to say the technical issues are firmly at my end, so it goes to show that all the best laid plans sometimes don't go as you expect. So apologies for that, but I'm sure the content hopefully will keep you all interested. So as Anna said, I work at Lloyds Banking Group. I run the reputation strategy and planning team. We sit in corporate affairs with Andrew Walton as our director. I personally have been involved in reputation for around about 7 years, with a real focus on it in the last 4. We've also worked closely with Onclusive and in their previous guise as Kantar, and I'm delighted to be here. I'm always very happy to talk about reputation, and great to speak to Anna and find out a bit more about what Onclusive are up to as well.
Thank you very much, Scott. So let's kick off with talking about why is reputation so important in your sector?
So I think we need to go back to the 2008-2009 financial crisis, Anna, to be honest. We, as a bank and as a financial services industry, obviously had a huge reputation impact during that period. And post that at Lloyds, it was important that we understood our reputation with corporate stakeholders. At that time, certainly with Lloyds, we were under government ownership, and it was vitally important that we understood the perception of the group within certainly our corporate stakeholders, those who set policy, those who set regulations. So we've proactively measured reputation for the last 8 to 9 years, really trying to understand what people think about us, what their perceptions are, and really using it as a a currency internally to try and make decisions that support our reputation. We are obviously a commercial organisation, but it's hugely important for understanding that. We particularly look at corporate stakeholders, but as what we'll get into, we also look at our reputation with customers as well, which obviously is the bread and butter of what we do as a bank. So hugely important in our sector, but also I think hugely important across many other sectors too.
Absolutely. And so can you tell us a little about your role and your department? Where do you sit in the organisation and how are you structured?
So my team, which is Reputation Strategy and Planning, sits within Group Corporate Affairs. Our Chief Corporate Affairs Officer is Andrew Walton, who reports into our Chief Executive, Charlie Nunn. We are, I would say, blessed from a reputation perspective in that we do have a seat at the Executive Committee. So Andrew sits on the Executive Committee and reports into Charlie. So we are actively involved in decision making, and reputation is a big factor in what we do, and we're involved in many other products and other committees across the group. Within my team, we obviously sit within corporate affairs, so that covers the usual channels of media, public affairs, internal, social. What we are here to do as a reputation strategy and planning team is to look at the proactive reputation work. So we look at reputation strategy and then the follow-up reputation campaigns from a corporate perspective. So we very much focus on Lloyds Banking Group. Within my team, we also have a planning function where we use the Inclusive Forward Planner, which we'll touch on as well, I would expect. And then we also have our insight and measurement team, where we use the insight team to bring in the external context. What do stakeholders worry about? What are they thinking about? And what are their perceptions of Lloyds Banking Group? And then the measurement side, which is measuring the success of campaigns, the success of particular activity, but also measuring our reputation and understanding our reputation. So we very much think proactively about reputation. We don't get involved in the active management of issues or incidents. We support on the strategic work around how we approach them, but that's held elsewhere. My team's remit is very much to focus on the proactive reputation elements of Lloyds Banking Group.
Yeah, great. Okay, so thinking about that proactive piece, being on the front foot, how do you put together your campaigns, which are there to build your reputation? What does this look like?
So we use an integrated approach across many facets. It's important when we think about ourselves that we don't communicate in an echo chamber. So we need to really understand what is concerning to our corporate stakeholders. We do a lot of insights via primary research, secondary research around what our stakeholders think about us. So we are very much about bringing the external context in and understanding what that looks like. We then obviously have to bring in what the business wants to prioritise and where the business is heading and what we want to achieve from a commercial basis. And then we also need to think about the broader context in which we're operating. Obviously, you could take an example, and I'll touch on it later on as an example around cost of living. We take in the issues that are affecting society as well as we resonate with our audiences. So we bring those all in, and we get lots of viewpoints and different opinions and pull together a strategy. When we get to the campaign side of things, we then very much think about planning. So when are the good times to activate the content? When are people talking about the topics we want to think about? And when are the busy times that we want to avoid? So we're very aware of conflict management internally, but also conflict management of what's happening in the external environment. Also then on a measurement piece, we're very clear, and one of the things that we've been pushing over the last few years is the importance of objectives at the start of any piece of work. And the reason for that is good measurement. We have incorporated the AMEC framework, so we focus very much on we focus on 3 of the 4, so outputs, outcomes and impacts, and we're very much looking at, from a reputation perspective, as the impact. So we're really looking at how we can improve the perception of the group with stakeholders. So it's hugely important, and we work across the group. It's very important we don't think about this in isolation. I think I keep getting told that I manage the reputation of Lloyds Bank Group. I don't. No, I measure it, but the reputation is owned by the whole group. So we're very aware that we don't do this in isolation, and we join the dots across the group. So it's a wide and extremely exciting remit, but it does sometimes have its challenges too.
Great. So, I mean, if you've got any examples of how you've used insights and sort of planning tools to be able to generate ideas for content and activation, and that piece around scheduling and avoiding conflicts.
Yeah, absolutely. So as you can see on the screen, there's couple of screenshots of what the Inclusive Forward Planner. We have wrestled internally with planning for a number of years, and a few years ago we decided to make a relatively big investment in planning to make sure that we got it right. So a bit of a shout out to Inclusive for the Forward Planner system we use. We have, I would say, pretty heavily bespoked it, if that's a word, to suit our needs, and we now have a planning tool that allows us to plan our activity by brand, by theme, by audience, and by channel. So we have a real 360-degree view of what we're communicating. So we very much use that to see what's happening externally, whether that's to avoid conflicts or to look at some kind of newsjacking. If there's a piece of content we want to talk about, then we use it for that. But we do that, and we see what issues are coming up. We also do quite a lot of primary research to understand what is important to our stakeholders. So we really take good pride in that, real pride in what we're doing with our primary research, and we use that to inform decision making. And it's really important that we understand that, because the last thing we want to do, for example, is Lloyds Bank Group has a number of brands below it. So we don't want to flood our stakeholders with a number of messages across brands. So we're really focused on making sure that we give each topic and theme and piece of activity some airtime. So once we understand what's happening on a campaign element, we look at that and we understand what's happening, and then we really do use the planning tool to make sure that we get the most out of our activity.
That's brilliant. Okay, so you've generated some great content, you've scheduled it, you've laid down a great campaign plan. How do you measure the impact of your campaigns, and across all campaigns and on an individual basis?
So on measurement, we take probably a two-pronged approach. We have a long-term measurement prior sort of area framework, and we have a short-term. So in the long term, we're very much looking at changing perception. We think about our stakeholders under a well-developed model of awareness, understanding, familiarity, and advocacy, with the ultimate aim of driving advocacy among stakeholders, which for a bank you might find quite challenging, but hey, we need to be ambitious in these things. So that's kind of our long term, about changing perceptions. In the short term, we're very much aware of the impact of our activity. So we obviously have the usual channel effectiveness measures across media and social media and public affairs. One of the things that we've developed in the last couple of years in partnership with Inclusive is a media impact score. So this is broader than just net sentiment, and this feeds into our customer metrics, where we think about where the article is in the paper, whether it's positive, whether it's negative, what's the sentiment of it, how prominent is it in the paper, and the thing that we also look at is it on a theme that we want to talk about. So we look at our impact score and go, is it in the papers we want to reach? So we've tiered our titles accordingly by the titles that we want to reach, and those in tier 1 are scored higher than those in tier 2, for example, and those in tier 3. And then we look at, is it to the front of the pages, are we mentioned in the headline? And we've put together a good calculation across our brands to understand the impact we're having in the media. So we also look at the usual metrics as well across media around volume and sentiment and reach, etc. We are I think we have won the fight on AVEs, but it still crops up now and again, which I'm sure it does for many of you on the call. But we see the media impact score as it rewards us for focusing on the right areas. So not only does it show the impact we're having on the media, but also drives a behaviour change. So we do that. The other piece, just as we move on to think about reputation, is that we're very fortunate on reputation that we are part of our reputation score, which we will touch on, is part of the board risk management framework. So we report to our group exec committee and our board twice yearly on our reputation score. So we get good visibility and it becomes a topic of discussion. So not only do we measure impact across campaigns, but where the campaigns have a positive impact, that also comes through in our reputation score, so allows us to talk about that as well. So we've got a long-term approach, as I said, around primary research, short-term approach, which looks at what we're achieving, and then obviously how those campaigns are featured into our sort of group-wide scoring is also important to consider.
Yeah, no, that's great. So just looking here at an example of a campaign, the ability to use that impact score approach to make direct comparisons across campaigns, and to be able to see how different brands are contributing to each campaign. I mean, obviously some don't aren't mixed and spread across different brands. But for example, you did a lot as we exited the pandemic to help Britain recover. And so that was something that was a sort of a joint effort across lots of different LBG brands, wasn't it? And we were able
Yeah,
to.
I think that the Helping Britain Recover is a good sort of case study of where we've really had an impact from a reputation perspective. We we came out of the pandemic, going into the pandemic, and we very quickly across our insight and measurement team got on top of what we measured. It was a daily call we had, and we used that, and then we used the insights that we were getting from stakeholders to really think about, we talk about helping Britain prosper as our purpose, and we have done for years, and we refreshed that earlier this year. But at the time, the insight was telling us that talk about prosperity probably wasn't the best thing to talk about. And actually, we put forward an option to the board and to Group Executive Committee to start talking about helping Britain recover, and that got taken on group wide. And certainly our focus post-pandemic was about helping Britain recover, and we changed our focus for that time, and that was very much based on our research, both the insight we get through Inclusive and the primary research we get as well. So a really good example of where we've used that to help the business make a decision on where we focus our efforts.
Yeah, great. Okay, so you've mentioned that reputation is a massively high profile issue, and that it's really well understood around the group that everybody owns it. It's not just a corporate affairs question, and that it's something that the board look at on a regular basis as well. So it's great to hear that it's so well embedded and sort of respected around the organisation. You mentioned it as a sort of a currency or a basis for decision making. And how do you use insights to support that process?
Yeah, so we use a reputation tracker, which has been in the group for 7 or 8 years, and it's been well understood, and people like it, and that's also been worked in conjunction with you, Anna, and Inclusive over the last few years. So when we talk about reputation being a currency or a decision-making factor, we also need to understand that we are also a commercial organisation as well, and we have to make commercial decisions, and sometimes it's we need to focus on the commercial decisions, and sometimes it's just getting an understanding of that decision is being made, but this will have an impact or could have an impact on reputation. So we created an early warning system a few years ago to try and predict the reputation impact of certain decisions, so we can do that, and we still do that. So we look at headwinds and tailwinds. So we look at what headwinds we're facing into, what the potential impact of those are, and try to manage them and set up not just proactive reputation campaigns, but think about risk mitigation for reputation. So it's a huge part of what we do. As I said, we don't manage it, we measure it. So it's great for Andrew Walton, my director, to go to the Group Executive Committee and say, this is how we are, this is how we're performing versus the sector. And likewise, it goes to board, and we can talk about what we're doing to support cost of living, for example, from a reputation perspective, what we're doing to support the housing sector from a reputation perspective, and then the impact that those campaigns are having on our reputation. So when you work in a financial services organisation where pounds and pence matter and numbers tend to win arguments, it's good to have a number that you can point to that the group understands and executives understand, so you can be part of that conversation at least.
Yeah, no, I can definitely see that. So in terms of just having a look at what kind of thing this involves, we've got as Scott says, a system which has been in place for several years now at the group, and this is just an example of how we track Lloyds' reputation across the board, across all stakeholder groups. So essentially, we use human analysis of publicly available content and track this against an industry average. We also pull in data assets that Lloyds have available to them, such as NPS information, brand equity tracking, opinion former opinions. And so we pull in those kind of sources together with publicly accessible content such as social media, mainstream media, parliamentary records, NGO reports, things like that. And this gives a sort of a view for each stakeholder group about what their attitude is, what their opinion is of the group. We track this against an industry average, and now I'm showing you how we sort of disaggregate that. So we look at how each stakeholder feels about LBG across the board. And so this gives us a sort of an ecosystem, if you like, to be able to see the impact of campaigns, the impact of announcements, the impact of issues and messages on the wider reputation, and essentially gives a single version of the truth that you can report upstairs, essentially, that it shows what's happening across all stakeholder groups, rather than just letting them sit in their own silos, which is quite often the typical situation, I should imagine, in many organisations. So Scott, how do you, sorry, go on.
No, I was just going to, I think that's an important point, and one of the things that we've been key to focus on is, for example, when you make a decision, reputation is individual, so a decision will be received differently by different stakeholder groups. Although we have a single score, I'm much more focused on the disaggregated view of this. So, for example, when over the years, we've made some sort of cost-cutting decisions, so to remove costs from the business. Now, when you look at that, we know, for example, and we also know, they're not on here, but we do also measure colleague perception as well as part of the reputation tracker. When you announce cost cutting, across the media, that's largely deemed negative. Colleagues might see that as negative, but our investor audience see that as a positive, because obviously the return on equity might be higher. So it's important to understand that decisions are perceived differently by stakeholder groups. Although we have one number of the truth, and that's the number we focus on, we also need to understand that decisions have different impacts on different stakeholders. So very much my focus is on the disaggregated numbers. When you look at this slide here, it's really important that you understand what's happening and why it's happening to each stakeholder group, because it's different. And I think that's a really key point that we're trying to educate the group on now. Is yes, we have one number, but it's what sits below that that's important.
Yeah. Okay. So getting into sort of practical applications of this. How do you actually put this? How do you use this information every month or every quarter? How do you put this into practice?
So as I said earlier on, this is part of our risk management framework at the group. So my name's on some list for being for measuring reputation, which is great. The great thing is that, and a lot of other organisations who I speak to don't have this visibility for reputation. We have our targets that we need to meet for our reputation, and when we don't meet those targets, we obviously get highlighted. So one of the things that we did do, so as an example, post-pandemic, our score dipped below the targets we were setting, so we had to provide monthly commentary to our group risk committee on why it was there and what were we doing to change the score. So what it does do is it drives a behaviour change. So where our score dips below what our target is, it does drive a change in behaviour across the group. It gets visibility because it's a board metric and the board get the papers on a monthly basis. We need to explain why we are where we are. So that's a real tangible example of where reputation drives behaviour change. If there's a tracker that was there and it was interesting or people were interested in it, but actually it didn't drive action in the back of it, then that would be tricky. Whereas at Lloyds, it does drive behaviour, it does drive change, and we really do see the benefit of it having that exposure to our executive committee and our board, because people take action on the back of it.
Yeah, brilliant. Okay, I'm just going to round off with the last couple of questions, but I would encourage our audience to put some questions into the box. I can't see any at the moment. That might just be I can't see the drop down just at this moment, but it'd be lovely to hear from you guys. So I just wanted to round off really with what your future ambitions are for using insights to drive reputation going forward.
So I think one of the things we're trying to do is we've put it on the slide there, democratize insights and measurement. So that's trying to get the function to use measurement and insight themselves. So a bit more of a self-serve option. So increase the education understanding of what we can do, of getting that instant feedback. So we are putting in Onclusive Pro and a reputation platform, a media monitoring platform, and that's going to be accessible across the function. So when people are wanting to see what's happening with their activity or their campaigns, they can do it themselves. So they have an understanding of that and have an understanding of the metrics that we're trying to achieve. We'll still have a specialist measurement and insights team who will do the sort of the bulk of the work, but really trying to democratize it so decisions are made not just on the vast expertise we have in the function, but also based on the data and insights that we get. So really using it as a decision-making tool and democratizing that data. The second element is, if I look across group corporate affairs functions, a lot of a lot of people in them tend to come from a press background. What we're trying to do is saying the media is still hugely important, but we're looking much more at social first activations. We're looking at below the line activations, which conversations with politicians and regulators, and it's really trying to get all that into one place. So when people think about it, they're not just focusing on what was written in the papers that day. It's understanding what was said on social, what's been said on our own channels, for example, our website, and what's being said sort of in ad hoc conversations. So really trying to get the media and all our measurement across the channels into one place and understanding it, and also splitting that up between channel effectiveness, so how effective is our content, to what is the impact of our content, because they're two very different measures that we need to think about. Channel effectiveness is how effective is my team, impact on stakeholders is what is the perception change we're trying to get. And then the third point is, we as a bank, we have taken the strategy, and it's brought a broader communication strategy to, so we have kept relatively quiet over the years, because we think it's the right thing to do, and we still do think it's the right thing to do. But we feel within Lloyds we're doing some really interesting things certainly around measurement insight and around corporate affairs. We're winning various awards. We've just refreshed our purpose to help Britain prosper, and we're really seeing a change in how we work internally. So we're trying to see ourselves as a bit of a leader across the measurement insight piece. I'm really instilling a learning growth mindset across our piece on let's see what we can do. So trying to see ourselves as a leader, best practice, and understand what others are doing that we can learn from. And likewise, I'm very happy to share what we do as well, because I find it hugely exciting to talk about reputation and reputation measurement. Now, that might not go down well with other people, or might not be the most exciting dinner party guest, but I find it absolutely thrilling to talk about how we can make a difference through reputation. So yeah, they're kind of my three priorities as we think about the future.
That's great. Okay, thank you very much. Right, so we're going to move on to some questions now. Please continue to put some thoughts into the box, everybody. So one of the things that you mentioned is that sort of cross-channel piece. So how do you work with marketing in all this? Obviously, it's a big organisation. How do you, are you quite separate from them, or do you work closely with them?
Yeah, so we have a really good relationship with our marketing team. They're part of our chief customer office in Lloyds, so they do sit separately from us. But we're very much don't see ourselves as working in silos. The big difference for us largely is they focus very much on customers, so how we support customers, how we reach customers, their share of wallet and customer service, whereas we focus on our corporate stakeholders. But we have learned a lot from them. I think there's a huge amount that corporate affairs teams can learn from how marketing look at measurement and how they measure success. And likewise, they learn from us, so we support them on some primary research elements as well. We also think about how they can support us in above the line work that we do to support the corporate brand. The media impact score I mentioned earlier on is part of our customer dashboards. That goes into how we think about customers, and the reason we've advocated that for a while internally is because how we show up in the media has an impact on how people think about brands. So if you think about Lloyds Bank as a consumer brand, if there's an article in Lloyds about Lloyds Bank that is negative, and a member of the public doesn't even is thinking about changing banks or taking out a new product, that negative story in the media can have an impact. So we need to work closely. We think that's hugely important, the impact we have through our media on our consumer brands. So that's hugely important. So we have a really, really good relationship with our marketing team. We have different priorities, but there's definitely shared elements of focus, and we're really keen to work with them on that and use their expertise. And likewise, when they're looking for our input, they come to us as well. So yeah, brilliant relationship. And I really think where you've got separate teams and they're not in the same teams, it's vitally important that you build those networks and those relationships, because we do have shared objectives, and they can learn things from us and we can learn things from them.
That's great. Okay, so we've got some great questions coming through here. So do you provide any financial return on investment metrics to your board? I'm interested to know whether you found a way to demonstrate this type of value to your board without the use of advertising value equivalents. Ooh, yes.
So
we, Marianne, very, very good. We feel your pain.
Yeah, it's interesting. I probably were not on the call, but some of you might remember Matt Young, who was our previous corporate affairs director, and he did a podcast with his new agency, and they were talking about how he advocates AVE because it gets you to be part of that conversation. I think you can be part of that conversation without using AVE. We don't provide financial return on metrics. I've been in corporate affairs for a long time, and I'm sure those of you who've been there have been called a cost center as well, and that's largely, that has been, you're just a cost center. But I think where you can, corporate affairs is there to bring the outside in. It's there to be we call it the moral conscience of the business. And I think we do see reputation as a currency, but we don't provide costs. I think, and I know there's been a lot of work. I've spoken to a number of other people who do this out there about putting up a monetary value on the work they do. I think that's the nirvana, if I'm being honest. If we can get to somewhere where there's a methodology that works, then I think that's great. But I think at the moment what we need to do to show our value is to, you can't put a currency on the things that don't get in the media. One of the challenges I say is, how do you measure the unknown? So if something doesn't get in the front page of the Times, how do you measure that? Where that instant doesn't quite have the impact that you're expecting because of some great work, you can't measure that. So I think it's a tricky one to answer. We haven't done it. We use reputation as a kind of proxy for currency, but we also just, it allows us to get into the conversation. So, if anyone out there has a methodology that can do it and can measure the things that don't happen, then feel free to get in touch. But at the moment, we rely on our expertise and our other measurement metrics to get into those conversations.
Yeah, okay. So, and how receptive were the board at first to receiving this reputation data from your team? How did they sort of onboard this concept of reputation and possibly something they might have viewed as slightly more intangibles than some of the other KPIs that they were used to processing every month?
Yeah, that's a really good question. I think education on reputation has been a huge thing in the group. We're so I think, Anna, you may know better, but I think we're probably 8 or 9 years into having the reputation tracker. I think where we were post-financial crisis, reputation was a huge thing. I always remember there's a quote. I know Mark Carney said something. I think it was Warren Buffett said it. Trust arrives on foot and leaves in a Ferrari. And the same is true of reputation. The financial services sector lost a huge amount of trust and reputation through that period, and I think the board were really aware of our reputation. So we were, as a function, I wasn't involved at the time, but bringing our reputation to the forefront. And I think what's interesting is when you look at the reputation tracker, the graph that we showed you, every peak and trough in that, I can probably tell you why that's happened. And I think, subjectively, it felt right to the board. So you could turn around and say, well, this happened and that's what's happened to our reputation. And it felt right. So I think when you have that subjective feeling and people listening go, yeah, that's probably about right, you get trust in the metrics. And when it goes up and when it goes down, it gets right. We did really well when we came out of private ownership because we got lots of positive coverage about that, and that felt right. Likewise, I think it was 2015, our ATMs and our point of sale machines, so your card machines and shops, went down, and that's still the single biggest impact on our reputation because operational issues are the big things. When things impact customers are the biggest movers on that. So I think it was an education piece. I think it took time. I think they also understood that the biggest education piece I've tried to say is we can't change reputation score on our own. That takes the group to do that. But I think when you present anything to a board and your reputation scores minus 25 or whatever it was back in the day, I think they get alerted to it and try and understand why it's there. And over time, the education's got better as we've gone through the years.
Yeah, great. Okay, well, and I think we're all very appreciative you've been very transparent about everything, but there's a question here saying, can you share an example of a time when you've come back from a negative reputation incident and what tactics did you employ?
So I think, I touched on the pandemic earlier on. I think if we look at that was a really interesting time for us as a financial services sector. there was, I don't like go back to pandemic because it wasn't the best time in our lives. But at the start of the pandemic, there was a huge issue. Everyone was worried about jobs and businesses surviving, and there was a credit issue across. So say the coronavirus business interruption loan scheme, then we had the bounce back loan scheme, and there was a real issue around banks providing credit, and it was a really tricky time for the whole sector to try and mobilise at pace to get money into the system, obviously backed by the government. And what happened during that period is obviously banks, rightly or wrongly, were the reputation plummeted because people were worried, and there's money sort of trying to get out to the system, and it was a challenge. So our reputation went down, and obviously, as I mentioned, we didn't get targets, and we saw that across the sector. So one of the things that supported that was actually we saw it across the board. So because we monitor a number of brands across the financial service sector, we saw that actually it wasn't just us, it was others as well. And as a sector, we pretty soon realised that actually we are largely homogenous, and we worked with UK Finance, our trade body, to think about how we came back from that. But the one thing that we did think about was we just had to do the basics well. We couldn't do anything other than make sure that we were communicating clearly to our customers. We did an advertising campaign as a corporate brand to signpost how we're supporting customers, so our corporate stakeholders got it. So we looked at that and went, actually, how do we do this in a way that's going to improve our reputation? And obviously it helped with the bounce back loans, we mobilised that pretty quickly, but it was largely just doing the basics well, talking to customers, lending money to those who needed it, talking to our corporate stakeholders, making sure that as an industry we're doing the right things. So we looked at that, and that, as I said, we had daily calls, we had weekly updates on our reputation and how it was feeling, not just on us but across the sector, and we really monitored that around what was happening. We took daily news feeds of what was being talked about across the industry, which organisations were being talked about, and we dealt with it in a very methodical way. And we did that probably for, I'm guessing, from end of March through to end of June, I think, because we did daily calls on what we were doing, what our activity was, and what we were saying. So we really used our reputation to decide what our strategy was. As I said, it provided, comfort's the wrong word, but it provided reassurance to the board and executive committee that it was the whole sector, and in fact it was broader than the sector. There was lots of organisations who were impacted in the same way. So it was just about doing what we do well, which is being a good bank.
Yeah, brilliant. And I think this is a question that's about outside your organisation. Can you think of any examples where you've seen any really successful reputation management from elsewhere, or within your own organisation, if you can't think of any externally?
Yeah, I mean, it's interesting. I think any good examples of reputation management externally. I mean, you look at the moment at things like the cost of living at the moment, and you look at the energy companies, and I look at somebody like Octopus who are doing quite well. It's great to see their CEO, I think, was on Martin Lewis's programme last night, and I think where you are able to do that and face into the issues in person is great. So I look at Octopus at the moment, I think they're doing something that I think I'm not sure we would do it or we could do it, but I look at them and go, that's great on what they're doing. I think so. Octopus are definitely up there. It's interesting. We've always kind of looked at ourselves. We see ourselves, we're 97% British based, so we are. We focus primarily in UK, and we look at other primarily UK organisations, and John Lewis always gets called out. And I always look at John Lewis and go, they've got a very different model with their partnership, but I always think they are British as well, and they've been doing some good things. But yeah, I think if I was going to do a case study on anyone at the moment, I'd probably look at Octopus and think actually they're doing some really good stuff, and in a difficult climate for them being an energy company, that is key reputation management there, where you're in an industry that is facing into all sorts of issues, and they are still seem to be doing the right thing.
Yeah, no, I would definitely agree with you on that one, and we actually did do a case study on that very subject, and we did find that Octopus came out very much top, pretty much across the board, but actually what really stood out for us was how well customers were responding to what those guys were saying, and I think a lot of it was down to the empathy, the we're here to help you out type thing. Yes, we're we're a business, but they actually put some quite good empathetic messaging out there, and they were rewarded with a really different sort of sentiment profile in comparison with anybody else in the marketplace. That was, you know, back at the first ripples of the price rises happening in the springtime, and yeah, definitely they stand out for us as well. So I've got a couple more sort of slightly more technical questions about the reputation tracker, which I will bundle together somewhat. Does the media impact score feed into the reputation score that you measure, is the first part of it? And do you consider media a stakeholder group or a channel to reach other stakeholders? Which is a great question.
So I'll answer the first one on media impact score. So no, it doesn't feed into it, into the reputation tracker, and that's largely historic because the media impact score is a relatively new score. We don't, and we've had the reputation tracker for years, we don't overly want to change the methodology of the reputation tracker, because by adding in, you know, different metrics, it could make it tricky. So the media is largely based on sentiment in the reputation tracker, and which has been for years, and that's been the metric we've used for years. And that's so it's largely around positive, neutral, balanced, and negative sentiment of articles. And obviously across media, we also add in, as Anna mentioned, primary research, and that's around what's the perception that we do through primary research. So the media impact score we'll use for ourselves internally, but that's primarily a customer metric at the moment that sits in our customer dashboard. Second question, which has slipped my mind, Anna, apologies.
No, oh, that's fine. Okay, yes, it is probably very different actually. So do you consider media a stakeholder group in its own right?
Oh, of course.
Or is it a channel to reach others?
So both, and it's probably because I use media as a catch-all. So we, as a stakeholder group, we monitor perception of journalists primarily. So we look at within our industry, we look at business finance journalists and personal finance journalists. So we monitor perception of journalists. We see the media as a channel to reach stakeholders. So yes, we see it as both. But yeah, when I talk about, you know, media perception, you know, we look at journalist perception, but we see the media as a channel to reach other stakeholders.
Yeah, quite right. And then finally, I'm going to ask one last question, which is, are there any stakeholder groups that you struggle to capture reputational data about? And obviously this could be just due to lack of external data, external panels, or possibly due to, you know, sensitivities internally. You know, how do you approach this if there's any stakeholder groups that you find it a little bit more difficult to get that data to be able to derive insights on what they're thinking?
Yeah, I mean, I think we I can't think of a stakeholder group off the top of my head. You know, I think obviously we monitor colleagues. We're not responsible for monitoring reputation with colleagues. We use our people team to do that. So we use our insights around colleague surveys, etc., which is great. And we also, you know, we use primary research. I think I suppose the thing we're looking at the moment, which is thoughtful, is how do we measure the impact of, for example, our social media and our own channel content? So not a stakeholder group in itself, but we could obviously monitor effectiveness, you know, click-through rates, unique hits, and you know, we've got a social analysis team who do this very well for us. We sit in a different team, but I think one of the conversations that I've had, which is probably quite live on at the moment, is how once people read an article on our website or they see a social media post, what is the impact that has? So if you look at the AMEC principles, we can measure the outputs, because that's easy, and we can measure the outcomes, whether it's a like or something else. But what is the impact? What do they then? How has that changed their perception? How do we measure that? So just that's something that we're thoughtful about. I'm sure there's people on the call who can probably answer that question, but that's something that we're thoughtful about, is, you know, across Twitter, LinkedIn, Instagram, and our own website. How do you measure the impact that's having? That's probably the one thing. It's not necessarily a stakeholder group, although they are stakeholders using it, but that's something that's probably top of mind at the moment around hard to figure out audiences.
Yeah, Brilliant. Okay, that's great. Thank you very much indeed. So I think that's everything. I think we're coming in pretty much on the nose of Q2. So I'd first of all like to say thank you so much to Scott for giving up his time to talk to us about this. It's been really interesting to hear his point of view on the importance of reputation and how to measure it. Just a couple of notes here that this webinar will be available on demand later this week. You will also get an email notification about the session that I mentioned next Tuesday with Kyle Mason of Shell. That's Tuesday the 15th at 12 p.m. And so you can enjoy or share this content on, watch it on catch up, as we say. And I would like to say thank you very much for giving us your attention, and thank you again to Scott for giving us your time. Thank you.